Hello, everyone. Good morning. Hello, everyone. Good morning. So once again, let me welcome us to our morning market review. This is Rally Trade and of course Rally Academy. This is our morning market review. Make daily profits, alias morning market review. So you can make daily profits when you can analyze or review the market. That's me. My name is Emmanuel. I'm going to be anchor for today. Hello, good morning once again. Welcome to our morning market analysis. The first time there was a little glitch, so we are back now. Morning, guys. So this is our morning market analysis. So we do this every trading day. I mean Monday to Friday, 8 a.m. in the morning. We try to give you one solid hour of market analysis where we look at tips and tricks, reviews and previews on how to navigate the market profitably. And I want to believe you have been navigating the market profitably. The market moves ups and down, market ranges, the market trends. So you can navigate it. You can navigate just like a sailor will navigate the sea. You can navigate this one, sir. So I think we have just few persons in the room, even though we have more persons joining us later. So we'll just give a few minutes, but before that few minutes, let's just talk about trading generally. This is December, the 12th month of the year. I want to believe trading has been good to you. I want to believe you have been keeping your head above water. You have been good. You have been withdrawing from the markets. One way to learn is to learn from your own experience. Another way to learn is to learn from other people's experience in trading. One way to learn, there are only two ways to learn under heaven. I mean, on this spinning planet. Now let's go direct. There are only two ways to learn trading. Is to learn from your own experience or is to learn from other people's experience. Now, the two of them is not bad. The two of them is okay, but one of them is the best, other people's experience. But you can equally learn from your own experience. I mean, from your previous trade, you can go back to your account history Learning is so important. Learning is beginning of prosperity. Learning is beginning of withdrawals. If you must withdraw on this market, you must start from learning. Uh, Lack of learning is the beginning of failures and losses, guys. So you can learn from your own experience. You have been trading for some months or for some weeks. You can get back to your account history and, of course, learn. Or you can or you can learn from other people's experience like this now. This particular MMR money market analysis is other people's experience. And of course, that's the best, right? That's the best. That's the best. Learn from other people's experience. So you can pick up videos from YouTube, from our YouTube channel, and just anyone you want. There are several analyses that we have done already, right? And they are all waiting for you on our YouTube channel. Get to YouTube, Rally Trade on YouTube. You'll see tons and hundreds of videos that you can watch, Uh, Most times, just 1 hour analysis may not really be enough for proper learning. So you may want to also learn again and again by getting to our YouTube channel, okay? Then also what we try to do also, we try to also drop our number so that you can equally reach out to us official hours from 8 to 5. Talk to us about trading. You can also reach out to your account managers. All of this is what Rally Trade has put in place so that our traders will be profitable, our traders will be doing well. This is the 12th month of the year. I want to believe trading has been good to you guys. If it has not been good to you, we still have some days to learn. We still have today to learn. All right, I think that being said, I want to believe you guys can hear me. So get to the chat room. Let me know if you have been hearing this. Should have done this before now. Sound check. 1, 2, guys. Can you hear me? Just one person. I can hear you. That will be enough. That will serve. Okay. Nobody's typing. Okay, Chinedu there, you can hear me. That's fine. Okay. So if you want to say something, you can just get to the chat room. That's Collins there. Mm. Get to the chat room and drop your message there, please. So thank you very much, guys. I can hear, I can see your messages. All right, so let's do a little of fundamental analysis. Then we'll switch over to technical analysis. Let's look at fundamentals. So fundamentals are macroeconomic indices and data that can affect the global economy, right? Then that can affect the instruments that we trade. So you want to find out what is actually driving the assets that you are trading. What is influencing the value of the assets that you trade? What is making the price to go up and down? So before you trade every day, each day, you want to find out what is the main player, the main factor that influences this instrument that we trade. So when you do that, we call it fundamental. So there are several websites we can check. So let me share my screen real quick here so that we can see those websites. So I'm sharing my screen right now. So I've been able to share my screen. Please check if you can see my screen. I believe you can see my screen. So let me continue. So this is Forex Factory. There are other websites you can check. But we like to make things simple and easy here. So we like to use the Forex Factory, right? So you can use investing.com. I want to believe you know investing. You can use Bloomberg. Wonderful website. Wonderful, wonderful. I mean, Bloomberg, very wonderful. You can use Reuters.com. You can use you can use my FS book. You can use Trading Economics. You can use FS Street. Several websites. There's one called Trading Star. Where is it now? Trading Star. See Trading Star here. So if you use Trading Star, you can see how big players are positioning themselves across the currency pairs, right? One of a very wonderful website, I'm telling you. That's Trading Star. I want to believe you're seeing it. So you can see on individual, you can get these informations on individual currencies, right? Australian dollar, British pound, Canadian dollar, euro. So you can just get, so this is their commitment of traders report here. So let's go back to our calendar. So later you can check out that website, okay? It will be beneficial to you. So let's try and keep this very simple here. This is Forex Factory, right? So you can see the news events, right? So these are the events or these are the activities that will rock the market, that will move the market for today, right? So remember, you want to just check this website and see the news that will affect the market. Then, of course, make sure you always have stop loss and take profits on your trade, right? So that you don't get a movement that will be too volatile uh, against your trade, right? So that stop loss will be able to protect you on that trade, okay? But if you get a movement that is very volatile in your favor, is it not good? Come on. That's very good. So for today, let me just run through them. From 1:30 a.m. today, already we've seen that we had the news from the AUD, employment change, unemployment rate. For 9:30 today, we'll be looking at, we'll be shifting to Swiss National Bank, right? That is Swiss franc. So we'll be having the monetary policy assessment. Monetary policy assessment is a non-data news, right? So they are assessing their monetary policies to know whether the economy has been good or maybe it's going down, or maybe they should hold rates or they should cut rates. And of course, by that same 9:30, the Swiss National Bank policy rates. So this would be their interest rates, right? So by 9:30 a.m. today, so while they are also having their assessments, they will also come up with a decision to hold their rate. Their rate is at 1%, I mean interest rate, borrowing rates. But the forecast is actually 0.7%. Then we don't know what the actual will be. So Forex Factory, the top at the bottom left or mid left, you get to see the different rates, right? The interest rates of individual major currencies that we trade, right? So these are the rates as at this moment. British pounds is still is around 4.75, USD 4.75% interest rates, AUD 4.35%, NZD 4.25%, Euro. Remember, our attention right now is on the franc, right? The Swiss franc right now is held at 1% interest rate, right? So that is the 1% you're seeing here is actually the 1% that is here, right? As the previous. So that alone can affect the volatility of the currency. It can sway investors either way, right? Either way, to move their funds into the Swiss economy or to move their funds out of the Swiss economy. Investors all over the world are looking for areas that can have good yield on their investment, right? So nobody wants to throw money away. Everybody wants to multiply their money. Remember, we have three M's of money. You make money, you manage money, but investors all over the world have passed through those two stages. They are at the point of multiplying their money, right? Uh, all right, guys. So by 10 a.m., we have the Swiss National Bank press conference. After they must have given the rates by 9. Just a minute, please. And, by 10 a.m., right? By 10 a.m. So most times after the so most times by this 9:30 the currency may not move, right? But by 10 it may now move by 10. Okay. So what else again? So we have the euro also on Thursday, this same Thursday by 2:15 we have the euro. Then also by 2:30 we have the news on US dollar. So we have the news on US dollar, right? So that's by 2:30 p.m. So yesterday we had CPI, today is going to be PPI, purchasing. Uh, can you imagine? Yesterday we have CPI. CPI is a consumer price index. Then PPI is producer price index, right? So all of those news is going to be core PPI, PPI month to month. We have unemployment claims also by the same time. Then so we have a lot of red news. That means on your trade, please always have stop loss on your trade. Watch the market as the market is moving. You can take your position, guys. So let's switch over to our chart right now so that we can do technical analysis, guys. Technical analysis. So I think we have good numbers now. So let's rush to the chart. Two types of analysis: fundamental analysis. We have looked at it. Then of course technical analysis. Now the fundamental analysis move the price. Then we analyze that movement that we have seen done by the fundamental. We analyze it technically, right? We analyze it by using what we call market structure analysis. Market structure is the language of financial markets. So financial market really have a language. It's just like if you're in China today and they are speaking their language as a Nigerian, you may not be able to hear what they are saying. Even though they are trying to sell you goods very, very cheap, you may not be able to participate. You may not be able to buy at a low price. So in the same way, if the market is communicating through market structures, right? But if you don't understand market structure, uh, you may not be able to take positions, to take your trade, to buy at a low price, or to sell at a high price. So that is why you need to understand market structure analysis. You need to understand market structure analysis. So let me share my screen now so that we can do some market structure analysis here. You're with me on this, so let's get it done. So real quick, let me share my screen, guys. So I've been able to share my screen. So this is the USD index, right? USD index. So I like to start from USD index, the dollar index. So because most traders their trades are around the dollar, right? So it's that they are trading Euro USD, they're trading GBP USD, or even if they are trading in the indices like US 100, US 2000, right? To US, you're hearing US in it. So all of these instruments that has to do with the US, of course, the US dollar will greatly affect it. Even gold, right? Even gold, the US dollar have correlation, even though not 100% correlation, we still have some level of correlation with gold, and that correlation is a negative correlation, guys. So let's do some analysis here on the USD index. So I will just switch over to H4 time frame here. So zooming into what is happening here, we can see that we're having an upward movement here, going upward, as you can see, like this. The market started creating higher highs, higher highs, higher highs. And while doing that, the market was also creating the market was also creating some level of higher lows, higher lows, higher lows. As you can see that, right? So this is what we call a channel, right? So a trend is actually a channel, by the way. Higher highs, higher lows. But if we zoom into it, we'll notice that the market gaps here, right? And after that gap, we have seen the market started going downward, right? So let me switch over to H1 time frame. So you can see the different time frames are actually all important, right? Just like I tell my students here in class, physically in Port Harcourt here, I do tell them the time frames are for detail of the market. So if you're on H4 time frame, if you want to see more detail about the market, you drop down. No, it's not you that is dropping down. You change the time frame to a lower time frame. That's what I mean by you drop down the time frame to H1 time frame. If you want to see more detail again, you drop down or you change the time frame again to 30 minutes time frame. So the lower you go, the more detail you are seeing. This detail I mean is the more information you are seeing. I know information is key. Information is key. Information is key. You would like to know what the market you would like to get more information about what the market is doing. That's the information I'm talking about. Is key, is key, is key. They say in the multitude of counsel, there is safety. What is counsel? Information. So that means the more information you gather in trading, the better your trading decision would be. So don't just say, hey, I only like H1 or I only like H4. No, sir. If you're on H1 and what you're seeing doesn't seem too fantastic, like you don't really understand what you're seeing, and you may want to drop down to a lower time frame to get more information. For example, you may want to see a double low, right? A double bottom. You may want to see a triple bottom. The candlestick, one candlestick on the H4 candlestick may not be showing you that, right? But if you break H4 candlestick into 5 minutes, come on, guys, you'll be able to see the lows of each of those 5 minutes, all embedded inside the H4 time frame. Guys, I don't know whether you are understanding me. So if I want to see more details here, I can equally go down again to M30, right? To see more detail. This is all very simple. It simply means one candlestick will be broken down into two if you're moving from H1 to M30. So most people always, in all of my trainings, like the last one I did in Benin, they asked say, Emmanuel, which time frame is the best time frame? Oh my God. But with this knowledge now, you now understand why we have a different time frame, right? The market is one. The market is one. The market is one. But then with the different time frames, you can get more detail about what is happening so that you can enter your trade precisely at the right point you wish to enter. So that being said, if you look carefully, this market is trending upward. We are having we got a gap here, right? And that gap is a pressure gap, right? It's actually a gap down. But before that, let's see what has been happening. We have been on an upward trend, right? So this was the high, right? So in fact, we have what we call a rare, yeah, relatively equal highs. I know the market creates relatively equal highs as a trap, right? As a trap or a liquidity void, and an area where the market uh, uh, has promised to revisit. You know, when you set a trap in the bush, so you are promising yourself to come back to that trap. By setting a trap is a promise to come back and check if it has catch. In the same way, whenever you see relatively equal highs, it's a promise that the market will come back. You understand it? So it simply means the market knows that there will be a lot of orders lying above that area or below that area, as the case may be. So the market revisited that place. So that being said, let's run very quick. So the market crushed these relatively equal highs to form a new high. That in itself shows an upward trend. Of course, crushing the highs is actually what we call a break of structure. Don't forget, this analysis is a market structure analysis, right? And the structures are the highs and the lows. The structures are the highs and the lows. So the market breaking the highs and the lows is telling us if it's going up or it's coming down. And the market, okay, let's be specific now. The market breaking the highs, it simply means the market is going up. The market breaking the lows, the market is going down. So one thing you want to do in your trading is before you place a trade, you take your time and draw out these lines. Just draw it out. It makes the job easier. Once you draw out the line, then you look out for the most recent break of structure. That is the most recent time the market has broken structure. The most recent break of structure, sir. So once you get the most recent break of structure, if that break of structure is breaking above the highs, right, that is a directional bias for a bar. If that recent break of structure is breaking above, below the low rather, it's a directional bias for a sell. So the first thing you want to do is you get your bias in place. Now in trading, the first thing to do is not to place your trade. The first thing to do is to get your bias. So write it down. Write it down. Write it down, sir. Let me give you like 5 seconds to write it down. So in trading, the first thing to do is not to enter a buy or a sell. The first thing to do is to get your bias. So what is your bias? So how do you create a bias? To create a bias means you look at the chart and you look out for the most recent break of structure. I mean the most recent time the market have traded either above a high or below a low. So this is the high that was crushed to form a new high, and this is the low responsible for that high, right? So the market moved down from here, but did not fail to trade below this low, right? Just 1 minute, please. Let's continue. So so the market dropped this much, close to this low, but failed to trade below this low. So the market dropped close to this low, but failed to trade below this low. The next time it went up, it also failed to trade above this high, which is good, right? Which is good. So that means our directional bias is still in place, right? Why? Because we have not traded below this low. So we are not traded below this low. So once we trade below this low, our directional bias will now shift. So this directional bias is needed if you want to hold the trade for a long time. It's also needed for a long a swing trader, right? So we have seen the dollar gap down, as you can see, the dollar gap down, which is pressure to the downside, and of course the market has actually shown us that pressure, right? It has moved down this much, right? But then it has not traded below this low. Now this low is our strong low, not this low. This low is our strong low, right? So that means instruments like Euro USD should have moved up by now. Instruments like GP USD should have moved up by now, right? But as long as we are still maintaining, the market has not violated this low, and all of this movement upward will even be premium price for a sell downward. So let's shift now to Euro USD. Let's do Euro USD real quick. So So this is Euro USD real quick. Let's also start from H4 time frame. So we say instrument like Euro USD should have moved up, and of course, this is the movement we saw, right? Look at this movement carefully, sir. This movement is actually impulse to the downside, retracing to the upside, impulse to the downside. See, this movement is actually impulse to the downside, and of course, retracement to the upside. And of course, another impulse again to break structures to the downside. So this movement we are seeing right now is actually a retracement to the upside, right? As you can see. So even without moving to a much lower time frame, this area is an area where the market is rocking our dynamic resistance, right? So it's not a bad area, right? For the market to now start moving downward, if you understand what I mean. It's not a bad area for the market to start moving downward again, caution this low to form a new low. As long as this particular price level has not taken out this low, right? Has not taken out this low. So this is how you trade with your Hmm. So back to Euro USD here, guys. So let's drop down to a much lower time frame. Let's see what is happening there on the much lower time frame. So the much lower time frame, I think, is looking much even simpler and clearer on this much lower time frame, right? Mm. Because all of this area have acted as this particular area or this candlestick. Now, let me take my time and remove this node so make it much clearer. So this particular area have acted as a what now? An order block, right? A bearish order block. This area is acted as an order block. Hmm. Why? It's an order block because after the market formed this candlestick, the market did a very fast move to the downside. That's an expansion to the downside. The market came back to test it and, of course, move away from it. That is what qualifies it to be an order block, right? So, guys, excuse me. So, guys, the market is back to the order block, right? So inside this order block, we expect to see the market changing direction inside this order block. So once you see the market changing direction inside this order block, that is where your sales can come in, right? So your sales can come in once the market starts changing direction inside this order block. Meaning that this order block becomes your area of interest, right? So from directional bias, you get to area of interest. From area of interest, guys, you pick your trade. So that is the path to successful trading and withdrawing. So inside this area, the market should be able to show us a movement to the downside, right? So if we're on H1 time frame, I want to start seeing the market start moving to the downside. That means we want more detail, right? And from that H1 time frame, now you can even drop down to 5 minutes time frame, right? Or even 1 minute time frame. You just want to see something. So you can drop down to you can drop down to H 5 minutes time frame, right? So for five minutes time frame, you start seeing the candlestick. As you can see, it has already started printed some red candlestick, right? So that is the detail we are talking about. It has already started printed some red candlestick, right? Well, usually on this much lower time frame, we would like to see what we call a bearish engulfing, right? A bearish engulfing, or we would like to see our first change of character. That means the first time the market is trading below the low on an upward trend. So that will show that the sellers are coming back in position. So guys, don't forget this area of this shaded portion becomes your area of interest. For aggressive entry, you may want to enter, or you wait for the market to move into this area. Then you look out for your change of character inside here so that you can pick your trade, guys. So back to our H1 time frame. So I'll move to GBPUSD right now real quick. So on GBPUSD, let's look at the analysis we have here. Pretty much the same as what we have on the Euro USD. So real quick, so this is how GBPUSD looks like, guys. As you can see, the market is actually rocking this resistance. You can see there, the market is rocking that resistance level. So the whole of this area is actually a resistance for us. So if it's a resistance for us, what are we going to do? So if this whole of this area is a resistance for us, so it means the market has moved up to an area of resistance, right? As you can see, that resistance has been tested like 1 time, 2 times, 3 times, 4 times, right? 1, 2, 3, 4, 5. So this is the reason why it's always good to look at for the higher time frame perspective, right? So that means you are telling yourself that this market it will be difficult for the market to break this level. It will be difficult for the market to break this level. But if this market eventually breaks this level, it simply means the market will escape. It simply means the market will even trade much higher to even above 1.28. Remember, the most recent time, it touched 1.28, right? So it simply means the market will even trade much higher. But for what we have seen, sir, if you have seen the first time the market got to this level, it dropped. The second time it got to this level, it dropped. The third time it got to this level, it dropped. The fourth time, what is your instinct telling you? Most often than not, your instinct will tell you, this thing may also drop. Oh. This thing may also drop. Oh. So look here carefully. So from here, this thing may also drop, right? Now, if you do something like this, you may not be wrong. You may not be wrong. Why? Last year, towards Christmas, the price of chicken skyrocketed. 2 years ago, towards Christmas, the price of chicken skyrocketed. So that means if you're drawing a chart of chicken price, right? So whenever you're getting towards December, right? And of course, in December, you're getting towards 20th, 21st, 23rd, the price is always going up. So this particular year, if you have to draw that chart, what are you going to do? It's the same thing, sir. It's the same thing, sir. So if this chart you're looking at right now is the price of chicken, come on, guys, you understand that analysis, right? So that means around that area, around that period, the price is always moving up. So in the same way, around this area, the first time it dropped, second time it dropped, the fourth time it dropped. So there is a higher possibility, even though not 100%, but for what we are seeing right now is actually up to 80 to 90% chance that the price will drop, guys. So what do you do? So you now look at you now drop down to a much lower time frame, start looking out for reasons to sell, right? Reasons to sell. So that will not be, that is actually not a bad area, right, for a sell because it's actually an area, right? It's an area. It's an area. So this area is actually what we call a supply zone, right? It's a supply zone. So area where traders have their eyes on that particular price is, right? They're just looking for the first move to the downside so that they can jump in. So guys, as you watch the GPUSD, you start seeing the market going down, you too, you can jump in, right? So you can jump in targeting this low, right? You can jump in targeting the market to crush the opening price, right? After crushing the opening price, right? And of course, the market may also crush trade towards yesterday's low. So these are just the speculations. Then from here, it may start going upward again because the larger trend is still upward, guys. So I think we have done GP, USD, Euro USD, guys. You have any instrument you want us to analyze, you can get to the chat room, drop your message there. So I think the message I have here is Kolanos is saying, what about break of structure on both the highs and the low at the same time? Now, it doesn't really happen at the same time. Eh? One will happen before the other. For example, from your question, what about break of structure on the high? So that means the market breaks the high first. Then, of course, we are thinking, momentum is going up. Move down straight to break the low. So the last break of structure is the low. Now, in that case, we have what we call mitigation block and breaker block. That would be a very wide topic to cover for this particular morning session, guys. So that is what we call mitigation block and, of course, breaker block, right? So plus and minus, one of our advanced classes, we can cover that, but I've taught that before. So if you have, you can reach me personally on that. Then, of course, why can't I see other people's comment? If you have a question, you just drop it straight, okay? I'll be the one to see it and respond to it, right? So as others are dropping their comments, I'm reading it out so that you can hear, okay? So in the time past, others are trying to use this platform to sell, maybe to sell whatever they are doing to others. So that is why you cannot see other people's comments. So you drop your message, I'll read it out just like I'm doing. So Ale Bode Isedu, sorry if I'm other than that particular name. You say we should analyze GBP JPY, but usually we have done GPUSD, Euro USD. The next thing we'll do is we will do gold, right? As the custom is, right? We have a custom here, guys. So we do gold, then after gold, then we can now do your GBP JPY. Then we can look at these ones that you have mentioned, US 100, as the time will permit us. Okay, so let's do gold real quick. Let's look at what gold is telling us, guys. Are you ready for me? So instrument gold here, very powerful instruments that you want to trade, and of course, make money for yourself. Put more money into your account. Most persons just leave their money in the bank. Now, instead of leaving your money in the bank, put it here, sir, and be trading with stop loss. It's the same thing, sir. Or perhaps, okay. Don't put the whole of it. But instead of funding your account with small money as small as 100K, 150K, depending on your budget anyway, and depending on your capacity, you can put more money such that if you see a good trade, most person will see a very fantastic trade. They will use smaller size as small as 0.02, and they will make profit. Or perhaps their profit will just be 7,000 naira. But in that same trade, sir, you can add another zero, it can be 70,000 naira. Come on, guys. In that same trade, you can add two more zeros, it can be what? Oh God. But then because of fear, most persons don't do that, right? So gold is rocking to the upside. Gold have touched $2,716 per ounce, as you can see there. And of course, this is upward trend, no doubt. Let's drop down to 30 minutes time frame. Let me see the structures that the market is building for us. So you can see on that H4 time frame, the structure was not really clear here, right? It was not really clear. But if you look at the bigger structure, you can see that the market is rocking the previous high, right? So this is the second time in recent time, if you understand what I mean. By recent time, I mean this is 1 week, 2 weeks, 3 weeks, fourth week, right? So that means 4 weeks ago, the market was around here, and now the market is rocking that area. So by 4 weeks ago, the market was around 2,700, right? 27, 2,700 and 22. And now the price has rocked that same price, that same level again, as you can see. So that means this area should be a very strong area for gold. That's what it means. Now, but if you are zooming the chart to the left-hand side again, right? So we have this area here, right? We have this area here. This area is a support right from October. So remember, analysis of the left-hand side. That's what technical analysis is all about. So this is the left-hand side. The left-hand side of the chart is the history. The right-hand side is what is happening right now. So you look at what's happening at the left-hand side. Left-hand side, it's from that left-hand side I was able to draw this thing into the future. As you can see from this left-hand side, the market bounce up this level, use the level, break these levels, tested it as a resistance, tested it as a resistance. So is the market going to test this as a resistance and fail again, or is it going to break it to the upside? So these are areas where big money always pay attention to, right? Big money, they are not always on the charts. They come to the chart whenever the market reaches their key level. So on the chart, we have areas where we call key level. This is one area, right? That is because we are expecting a big displacement, right? A big displacement. A big displacement. Just imagine catching this displacement. Is this not a very big one? It's a big displacement, right? So at key levels like this, that is when big money, by big money, I mean the banks, right? And of course, the HSBC, the Hong Kong and Shanghai banking corporations, the JP Morgan, John Pierpont Morgan, JP Morgan and Chase, the Deutsche Bank. All of those big banks they come to the chart, the BlackRock of this world, they come to the chart whenever the market has reached key level. Why? Because at key level, we are expecting a huge displacement. So, sir, this is a key level, right? This key level can make your 2025 wonderful. Oh my goodness. I'm telling you, this key level can make your 2025 a wonderful 2025 because remember, we are already preparing for 2025, right? So this key level can make the price to do something like this. Remember the market has another level to come and test here, right? The market has this level to come and test. Just a minute. So the market has these levels to test. So the question will now be, but Emmanuel, which direction are we going? Are we going up or we are coming down? And let me look at what the daily time frame looks like so that we can see if we have some fair value gaps that the market will rush to go and embrace. For example, we have one fair value gap here. I'm just seeing this one now, right? So you can see I actually switched time frame for me to get this information. Sir, the time frames are for detail. Write it down. Write it down. It will profit you. The time frames are for detail. Now, without switching down this time frame, I did not even see this level, right? Without switching time frame, I did not see that. I did not see that level. So that means in the near future, right? The market would like to now, even now, before getting to that high, the market will come to this fair value, right? Because the market forgot something, and the market will come in to pick it up. Oh my goodness. So let me look if there are any fair value gap here. There is none here. Okay. Okay, the one here has been filled, right? Market filled this one. So this area might just be the next area the market will want to increase. And that area is not really far. It's still 27, right? It's still 27. So this market have these two directions. But from this analysis I have done, you can see that this fair value gap is also a trap, right? It's a trap. Remember what I said by I said about trap from the beginning, right? So a trap is a promise that you will come back. That's what it means. It's a trap, it's a promise that you come back. So this particular area is a trap, and the market has promised to come back or to move back to that area, right? Because it has been here before. That's the word back. So that means we may just be breaking above this level to test this high. But now let's go down to a lower time frame, guys. We have done analysis on a higher time frame. On a lower time frame, guys, this is obviously an upward trend. So if we are saying the market will get up to 2,766, right? So this is around 19. So that particular area is around 66. So if I think the market will get to this area, we may not be wrong. Why? Okay, we are riding an upward trend. We are riding an upward trend. So what if the price breaks above the supply zone? Am I supposed to buy? Of course, you are supposed to buy, right? So if the price break above this side, so let me leave this particular instrument. I think I've stayed long on this one. But at least you guys got the analysis, right? That analysis is good, right? It's good, it's good. It's good, it's good. It's like honey in the honeycomb. So guys, so if the price break above 27.25, right? So that will be a buy trade. So if the price break above this level, if the market trade above this level, right? So it's not a single price. So just wait for it to trade above this high. Now, in fact, if you want to use your recent high, if the market trade above this recent high, the recent high you're seeing right now, sir, the market trade above that high, of course, we are going up from there. And of course, if you look carefully, all of this, if you draw a trend line, you can see the market is rocking the trend lines, right? But this one is steep. This is actually steep. So whenever it's steep like this is about 45 degrees steep. You understand what I mean? By being steep, this is 45 degrees. So this is what I mean by steep by 45 degrees. So this is actually 45 degrees steep, right? So whenever the market is riding this 45 degrees steep, right? It may want to continue, but if it falls very well. But guys, guess what? Guess what? This market is going to touch this area, right? It's going to touch this area. So just be on the chart, buy at a lower price. So if the market retraces again to this area, guys, this is another area that you want. So our bias is to buy. Our bias is to buy. Now I think we have done good right now. Let's move now to somebody asked us to analyze GBPJPY. I think that was the first request. GBPJPY. So guys, let's look at GBPJPY real quick. Are you guys with me? So GBPJPY guys, are you with me? Well, we may not be able to analyze all these instruments, but then let's just do the ones that we can do. So just hold on a minute. Let me check what's happening here. So GBPJPY. So this is GBPJPY, yeah. So this instrument is working to the upside, though. Guys, two of us. So the person that said we should analyze this instrument, I want to believe you are already making this guy. You're making this fat cow. Don't deny us. You're making this one. So you have to send a prophet offering. Oh my goodness. So H4 time frame, this instrument is rocking to the upside. This is one instrument that you have to trade. right? Or you should trade. This is one instrument that you should trade if you cannot trade gold. If you cannot trade gold, why? Because this instrument is also very volatile, right? It's a currency pair that moves very well, right? So let me drop down. So this is already an upward trend, right? It's visible to the blind. Okay, so let me drop. Let me go to H1 time. So from H1 time frame, guys, we are seeing the clear movement of the market, right? The market is clearly moving upward, as you can see, right? So we have just crushed this high. So if I'm to draw my swings here, right? So this is one movement to the downside, retracement to the upside. So another movement again to the downside, retracement again, impulse again to the upside, right? So the market has broken structure. So all these movements, they are all internal structure. So they are just one leg to the upside. So the market has broken the previous high. So this is where it broke the previous high. So it is still rocking to the upside. So that means I'll be waiting for retracement to the downside before I can buy. But buying after the market has done the break of structure is actually a high risk buy. So guys, you should know when you are doing a high risk trade, a high risk buy or a low risk buy. If you enter buy right now, the market may still go up again, but guys, guess what? That's a high risk trade, right? So most traders that I have seen, they are not qualified to do a high risk trade. I don't know whether you understand me. Most traders that, in fact, 80% of traders in Nigeria, they are not really qualified to do a high risk trade, right? Why? The guy just want account with the money he funded with is his house rent, for example, and he want to multiply that money. He is to look for a low risk trade. For example, your children's school fees now, use that one to fund our account. It's to look for a low risk trade. You understand what I mean? Or the guy is complaining of the economy. The economy is biting, it's biting, it's biting. It's to look for a low risk trade. So, sir, you can define a low risk trade. Now, coupled with your stop losses in place, you can equally define if you're entering a low risk trade or a high risk trade, guys. So, whenever the market has broken structure, right? So, the market has a propensity to retrace at any time. So, you want to wait for that retracement, right? But sometimes while waiting, the market may just start going upward. It's okay. It's fine to miss some of the trade. So you wait for a retracement, right? So the market has offered that the first time. So this is the first time. The market may offer it the second time again, guys. So this is actually a fair value gap again. This area is a fair value gap again. So these two areas are areas where you may wait for the market to retrace before you buy. So we are done with JPY. Let me look at the next instrument right here. Okay, you say we should analyze US 30. So we'll do US 30. Okay, I have US 30 here, US 100, US 2000. Wow, we may not be able to do all of them. Let's just do one and, of course, call it a name, a bracket name for the rest. Okay. So what we do here is not just analyze, we try to give you, we'll try to teach you how you can be able to do this thing by yourself. The way you do it by yourself, you can start getting those values, okay? So US 30, so US 30 will be the last one we'll analyze, okay? Otherwise, we just do US 100. So guys, I think we want to vote right now. Between US 30 and US 100, which of them are we analyzing? Okay, you see, two votes, US 30, US 100. Oh my goodness. So let me look at the charts. When I look at the chart, I'll tell you the one I'll analyze. And let's analyze the one that can be able to cover up for the other. So let's look at the two charts, right? So this is one, and this is the other. So pretty much, are they on the same time frame? So pretty much, look at the two. Can you see? What can you differentiate, or what can you say about these two? The US 100 on the H4 time frame, upward trend. US 30 on the H4 time frame, upward trend. Hmm. Somebody will not say, but Emmanuel, why are you calling this an upward trend? So this is not upward trend. How do you know upward trend? Upward trend is defined by a break of structure. The last break of structure tells you the trend. As simple as that. So let me even do the hard one. I think this one is the hard one. Why? Because this one has retraced very well, right? This one I've not started retracing. This one I've retraced very well because whenever the market is retracing like these traders will now start switching over to sales, right? They are selling on an upward trend, which is fine. You can make profit, but that is a risky trade. Why? Because you are selling on an upward trend. I hope you understand what it means. So let's do this one. By the way, if you look at the comment section, you will discover that US 30 came before the US 100, right? And this is 30. This is 30. After GPJ, we have US 30. So that's from Aniefjok. Okay, this Aniefjok should be from maybe from Cross River, or maybe from from Calabar. Okay, that's fine. That's fine. That's fine. That's beautiful. So this instrument is already retracing. So guys, if it's already retracing, doesn't mean we are now shifted to the downside. That's why I'm treating this one. So on this H4 time frame, like I always do, this is the known high, the recent high that was taken out and violated from a new high, right? Then of course this high gave us this low, and this low was also responsible for taking out this high from a new high. So we got a gap to the upside because the market has been able to, while trading downward, the market was able to trade below that gap, use the gap as a resistance, and now it's now pushing downward. So very simple, guys. This instrument is still on an upward trend, though. Until this low is taken out, this is direct market structure analysis. Until this low is violated, we are still going up, sir. Until this law is violated. So how can you be able to endure or not be negative until this law is violated? Then you use a smaller lot size, guys. Or you fund your account and maintain your normal lot size. Top up your account. In fact, call me after this session, okay? Say, Emmanuel, give me the account number, the company's account number. Of course, you already have it. You top up your account, send a proof of payment to your account officer, or you can send to me. Now, quickly, now, if I use my Fibonacci retracement, I'll draw from this low, right? A strong low. Why? Because this low is responsible for breaking this high. So if you're using your Fibonacci, you want to draw from the strong low, right? And of course, a strong low is defined by the low that was responsible for breaking the highs, right? So you can see the market is retracing towards 50%, right? So my ideal level is usually from 50 to 61.8%. So this is my area I would like to see the market reversing. Now inside this, now I finished drawing that, so I would like to remove my Fibonacci, right? So that it becomes more easier and clearer for us to see. So inside this area, sir, I would like to see what we call a change of character. I would like to see the market start giving us some movement to the upside before I will start buying, right? If the market is printing red candlestick, bearish candlestick, demonic candlestick, I will not buy you. If the candlestick is still red all through inside here, I will not buy. But if I see a bullish candlestick, by that I mean, look here, please, sir. This is a bullish candlestick, a big green candlestick, in this case now blue, bigger than the previous one, the red, and of course that's a bullish candlestick. So if market prints that inside there, of course I will start buying. Otherwise, if the market prints what we call a change of character, I mean, if you drop down to a lower time frame, you start seeing the market starts giving you higher highs. On the lower time frame, they, of course, you start buying. Then let's drop down to a much lower time frame, 30 minutes time frame. Even if we may as well do 15 minutes time frame, guys. As you can see, this instrument is on a downward trend. As you can see, this is actually a downward trend. And of course, a retracement is actually a downward trend. Of course, we already know that. So it means this downward trend now, and you may be selling, but sir, as you're selling, make sure you take your profit on this level, right? So that is why you want to look at the higher time frame to know what is happening there before you can place a trade on the lower time frame, guys. Because those that are trading with only their phone, sir, they will only be seeing this movement. What do you think they will be doing? They will be selling until the market takes them unaware and start going upward from here. So, guys, this is the main reason why you want to switch from one time frame to another. I want to believe you've been able to get some value from this analysis this morning. My name is Emmanuel Odogu. Thanks for joining us this morning. And this is already 7 minutes past 9. I've given you extra 7 minutes, guys. My number is 090-262-4507. Again, 090. Are you typing? 090-2626-4507. My name is Emmanuel. Guys, join us again tomorrow for another exciting market analysis. Rally Trade Rally Academy. Bye for now, guys.